ask you about the unwinding of QE and the extent to which you think that the Bank of England's own proposal that you've heard, where they raise base rates by 0.25% and then sell gilts back into the market, what do you think the implication of that will be in terms of distributional impact on the economy?
I don't think anybody can quite predict what will happen here because we've never had a distortion of the gilt market that we have now. So this is unprecedented territory.
So what preparation should the Bank of England be making? Because, of course, the Governor argues that this is just a monetary policy intervention like any other and that there's nothing special about it, so that by selling gilts, it will merely have the impact of raising base rate. That's his view.
Yeah, and I think the bank has also relied on the view that the gilt market is very liquid, and therefore if you sell lots of gilts in the market, it won't really matter. Equally, I think their view was that buying lots of gilts on the way up didn't really distort the price, because there are lots of other reasons, and it's true, why UK interest rates might have been falling. But I think the bank has significantly underestimated the extent to which long-term interest rates in the UK have strayed away from the fundamentals. And if you look at inflation, if you look at the fiscal deficit, it's quite clear that the current level of long-term interest rates in the UK do not fit the fundamentals. And at some point, the market is likely to focus on those. The reason perhaps that it hasn't yet is that it expects the bank might still come in and buy a lot more gilts and doesn't want to get caught short. If or when the bank signals that it will no longer be conducting any further QE gilt purchases, there is a significant danger that there will be a sharp upward spike in gilt yields, and that could have knock-on consequences for other asset markets as well. 90% of savers hold assets with less than 2 years maturity, so that is a significant indication of the skewed nature of the holdings.
Although
of
the bank,
private sector
for those
wealth,
people, the bank says they've really been hurt more by the cut in interest rates,
which is what I said at the beginning.
In
yes.
bank rate rather than
though in saying that, the bank seems to be ignoring the effects of inflation, of course.
Explain that.
Well, they talk in the document about how people have been hurt, savers have been hurt by the cut in bank rate. Well, yes, that's true. They're getting lower interest rates, but at the same time, partly as a result of this policy, inflation is higher than it otherwise would be. And as a result, these people are actually losing money because there are negative real interest rates. So the bank chose not to mention that.
What are you in the end arguing for here? Do you think the bank should put up interest rates to help savers?
As it happens, I think the bank should eventually put up interest rates to help the economy, not just savers.
You say eventually. We are in this period of very flat growth that we have been for several years. Do you think in current circumstances the bank should put up interest rates?
Yes. I believe at the moment low interest rates are leading to a zombie economy.
Do you share the view that's been offered that there's something slightly ironic about the bank's position? Because the bank has said it does not wish to buy corporate assets because that would amount to either picking winners or usurping democratic decision-making, and yet actually it's engaged in a policy which is highly discriminatory between winners and losers, including whole segments of the population.
Yes, I think the bank has not understood maybe the distributional consequences of what it has done. If the government were to stand up in Parliament and say, we've decided the economy's in a hole and we have got to take away 10% of income from older people, from savers, and from pension funds, and we've got to give that money to the banks and to people who've borrowed a lot to be able to afford their borrowings more. Parliament could debate that, and we could decide whether there is a valid case for redistributing income from older people to younger people, from middle asset owners to the very wealthiest.
Yeah. And
but we haven't had that.
No,
and
I
this committee is starting to do that.
I mean, when we first questioned the bank about this, their line was, well, we're in an emergency and this is good for growth and etc. Do you think emergency is now sufficiently passed to start a proper re-evaluation of this policy? And would you accept the view that's been suggested that if you continue to pretend these things are emergency, then actually you're making a political judgment? You're smuggling a political policy in under the guise of monetary policy because you're sustaining emergency conditions at a time when emergency response, at the time when emergency conditions don't really exist.
I don't see that we are in an emergency condition. I think if you look back to 2009, the reason given for trying quantitative easing was to avoid deflation. That was the original remit. And the Bank of England's forecasts were that we faced a Japanese-style deflation. Having overcome those risks most clearly, the bank continued with its policy of QE, and it hasn't given a clear explanation of why there is a need for further QE if its remit is indeed inflation targeting.
And Mr. Lewis, would you like to comment on any of that?
Well, that's actually right. The Bank of England's own booklet on QE actually talks about this, reducing the risks of inflation falling below the 2% target, and said if inflation looks set to rise above 2%, then the MPC could put downward pressure on spending and inflation by raising bank rate and removing the extra money. Well, it's been above 2% for 39 out of the 45 months since QE began. I don't know how much time we make, but one thing also I would say about savings, if I may at this point, is the importance of savings, not just for the people who own the savings, but for the economy as a whole. The bank seems to underrate this considerably, but our savings provide the money for investment which enables the economy to grow. And undermining savings, not only for this generation but for future generations, as we heard might be the case, is actually risks decapitalising the country, being unable to maintain our capital stock, being unable to grow it. It is extremely dangerous, and I'm glad the committee is looking into this because I don't feel it's actually aired enough. The Bank of England seems to be a free run of this.
The difference between this recession and previous recessions precisely that people have not been thrown out of their homes in the same way, and those knock-on effects have not taken place precisely because there have been an easy money policy.
It's true, but you could argue to some extent that ameliorating the effects of the recession has been a form of pain relief rather than of cure, and that perhaps to have seen a little bit more in the way of companies that are now being kept alive by forbearance from the banks, for instance, might enable other companies who can't currently get finance to have started up and grown and provide.
And presumably also transfer from the next generation to this generation.
Yes.
That would be the other
I
side.
think the way maybe I can characterise it as follows, and you could compare it a little bit with what's happening to pension funds. What the bank seems to be doing is concentrating on protecting the downside. But you are not going to get out of the hole unless you find the upside. So, with pension funds, buying gilts may stop you getting worse, although it hasn't, but it doesn't give you the returns you need to make up your deficit. With QE, by helping banks rebuild balance sheets or borrowers afford loans that would otherwise be unaffordable, you don't actually get growth. So, you've looked at the negative control bits, but there is nothing coming through from the bank that says this will create growth. And it hasn't created growth. The evidence is clear, and I believe that ending QE is much more likely to herald a period of growth. And I would predict that if we do not have any more QE, the economy will be much freer to grow than if we do.
Well, that's admirably clear, and you've given very forceful advice to us, both of you have, on this important aspect of the whole QE question, which is the distributional effects. And we're very grateful to you for coming this morning to do that. This is just part of a much wider inquiry that we're holding into QE, and we'll be bearing in mind that what we picked up this morning as we take that inquiry forward. Thank you very much indeed for coming.
Thank you for having me.